Welcome. Yesterday we were looking for buys on GJ, British Pound, Japanese Yen. Stop loss here in anticipation that price should keep pumping and price performed beautifully because as you can see, we hit the TP and price just kept making new highs, just kept printing new highs. It was just beautiful to see because this is how I just expected GJ to be behaving, but for a very long time, GJ had been stuck in a range. So it was like some liberation for GJ to come out of that range, which is why you see this very aggressive and impulsive push. So at the moment, I'm just watching to see what price will do, because if this Asian bullish candle had not printed, this is where I would have taken my buys, stop loss here, and anticipating price to retest the high. As you can see, price has already made retested the high, so I'm not in a rush to take any buys today. Why? The price market has not actually printed that kind of retracement I want. Either retracement to go for sales or give this kind of retracement to take buys. Price did this kind of retracement but was corrected in the Asian session. So this London session right now for today, I'm just going to wait to see what price is going to do. If it keeps printing new highs, then I would do my post analysis to see where I would have gotten in. But I believe is to me it's better for me to stay out and wish I was in a trade than for me to be in and wish I was out. That is just the best way I can put it. So it's better for me to look at a trade performance and like, wow, how would I have entered this? Than for me to be in a trade and be, damn, why did I even get into this? Without a reasonable explanation, just because I had FOMO. You understand? So I don't want to, because of FOMO, get into this trade. If it performs, I will look at it and say, okay, what can I debunk here? Because FOMO made me not to, not FOMO make me not to enter. I did not enter because I was relaxed about what I was seeing. So what can I correct about that notion right now? So at the moment, let's wait for price to do what it wants to do. The 4 hours candle is about to close. Now, if it closes above like what is printing now, if it closes like this will be an indication that the next candle, if it breaks this high, will continue pumping. So if it breaks, let's say it makes a bottom wick, then flips bullish to break this high, we anticipate price to keep pumping in order to do what? Come to this level. That is trading on the 4 hours time frame. That means the stop loss will have to be the current 4 hours candle after it has made a low and broken the high. That is one way to look at it. But that will not be trading outside my trading setup. You understand? There are different setups you have to learn until you come to a particular setup that you're comfortable with and you just want to trade that particular strategy. So this particular strategy I'm looking at right now is if price closes strong bullish candle like this on the 4 hours, the next candle makes a low on the break of the high. I'm anticipating the candle to keep pumping to retest to get to this level, which is 165.860 price level. So with that being said, let's look at the next thing on our agenda, and this is gold. Gold performed beautifully. In fact, what I was looking at on gold as at yesterday, let me do this. As at yesterday, I was looking at taking buys above here to retest the high stop loss here. However, if you remember yesterday, I was also looking at if we get a bearish breach below this level, If we get a bearish breach below this level, this zone, below this zone, comes for retest, then we anticipate what? Further bearish momentum as in price to keep dropping. And as you can see, we had a bearish breach in the sense whereby price took out this demand zone on the 1 hour time frame. And don't forget, on the 4 hours, we're in seller's territory. On the daily, we're in seller's territory. It was just on the 1 hour that we were in buyer's territory. So immediately price took out these last guys who started the buy. We now did what? Converted from buys to what? Sells, which is why you see price retesting this low. So price dipped, came for retracement, and dipped again to retest the low. Retesting of this low is what you see here, which is corresponding with this low that had previously been made. Okay, so this is it. So we had done something like this on gold. So what we are looking at is either price will continue making new lows, which is scenario one, or price to retrace a bit, perhaps to this level, then come down to retest the low, which will give us S1, S2, and S3, S standing for support. And this will be arrow 1, which is resistance 1, resistance 2. This is scenario 2. That is price to retest this resistance without actually breaking it. Then scenario 3 is if price breaks this resistance, which is this level here, and keep doing what? Printing new bulls. That means price has to come above here for we to first of all think of any buys. Okay, until price comes above here, we are not going for buys, we are going to be stuck with our sell position. So this is what I'm looking at on gold. Okay, with that being, there are more things I could break down or analyze from this, but I just want to keep it simple and straightforward. Okay, don't forget, if you are just seeing this, endeavor to watch the forecast for yesterday and the one day before yesterday to have a better understanding of why price acted this way and why we need to look at it from this perspective or using this kind of eye to see the market. Okay, so the last is Bitcoin, and as expected, Bitcoin has dropped again. There is no just low in the foreseeable future. Okay, Bitcoin has dropped again. What I'm looking at, without being sarcastic, is price to drop to this level, 14,000 price level, $14,000 price level. Okay, this is what I'm looking at for price to do. So I'm not going to say, hey, anticipate the lows, hold the dip, because all those who are trying to catch the dip, imagine what has been happening. Catch the dip, price made a low. Catch the dip, price made a low. Catch the dip, price made a low. So how then can we catch the dip if, for instance, those who bought here at the 22,000 added another position here at the 21,000, added another position here at the 19,000, and now we're at 18,000. How do you think they would be or they would feel? That means for them to even make profit, price has to at least come above this level for them to be very, very calm. Because even if price comes above this level, the loss this one is holding depend on the size that matters. Because I know some people trade this kind of strategy where if they enter 1% of their account here and price keep making low, they will enter 0.5 here, they will enter 0.25 here, they will enter 0.125 here, just keep dividing it. While some others, if they enter 1% here, they will enter 2% here, they will enter 4% here, they will enter 8% here. So that if price turns, the 8% here will even cover all of this. Then if price keeps making low, they enter 16% down. That there are different ways of trading. You understand? So it is very wise not to force the market to do what you want it to do, because in the end, not everyone can control the direction of market like the institutional traders, or just them banks, institutions, hedge funds. Not everyone has the money and the willpower to push price to turn in the direction they want it to go. So with that being said, gold is dipping. I am not seeing any buys in the nearest future, except the buys that will come as a result of we trying to catch the retracement. So with that being said, I'm anticipating gold has already done some, Bitcoin has already dropped. So I'm anticipating some retracement for price to continue its bearish momentum to where? To the 14,000 price level, which is this here. Okay, this level. So with that being said, do well to subscribe, hit that notification button, comment and like. Okay, you can find shortcut here. When you hit that notification button in the shape of a bell, select the all option. Okay, have a lovely midweek, trade safe, and Baraka Bashad, peace.